Good day everyone and welcome back to this week's episode of Crypto Vibes with Walt. Thank you everyone for tuning in. I really appreciate your support and I'll keep it short and simple this time around. So we'll start off with the global macro first and then delve into some of the charts, understand the price action and look for possible setups. Now, as we discussed last time around, the GDP growth for the first quarter has been negative, and the Atlanta Fed are predicting a negative Q2 GDP growth as well, which means that the US is in a technical recession. Now, the inflation remains high, and now the housing and the job markets are also feeling the heat. The earnings report will be out in the next week or so. Some of them have already published it. So some of the reports will be out next week or so, where corporates will share their Q2 earnings and give their projections for the future earnings as well. Now, in my opinion, given the deceleration that we're seeing in the US economy, given the demand destruction we're seeing because of the higher prices and the Fed raising cost of capital, it is highly likely that they'll be revising those numbers down, possibly to the current earnings forecasts. We've also had the unemployment numbers out recently. So as you can see that for the month of May, it was 3.6%, June and July, it was also 3.6%, which paints a picture that the US economy is strong and can withstand further tightening. But the problem with that logic is that the unemployment is a big lagging indicator and it changes in a blink of an eye. Now, we are already seeing the job freezes and layoffs in the tech sector at a level that were previously seen at the 2020 levels when the entire world was closing down. So there is a massive steam building up if you couple that with the rise in cost of living. Now, the Fed also reiterated the fact that they will continue raising the rates because they look at the unemployment numbers and they will look at the CPI numbers that came out recently. And a 75 basis point is definitely on the table, and maybe another 50 in September, which is bearish for risk assets. Now, as you can see that the CPI numbers were published recently and it was way above what was forecasted. Now, because of this substantial increase in the CPI numbers, in my opinion, I think that 100 basis point is also on the table and not just a 75 basis point rate hikes, which will again be very bearish for risk assets and can send the entire market down 20 to 30% minimum. And hence, it is a time to be very cautious, to manage your risk and tread carefully. Now, moving on to the charts. Now, if you recall, last week we talked about this macro range that price was flirting with and how price should react. If it was bullish around the range highs, and what would price do if it was supposed to be bearish. Now, some can also mark this high as a level of support, but I primarily use the extremes, the range highs, so I will use this level for my understanding. On the lower time frames, we had talked about a very specific scenario that should unfold if price was supposed to be bearish. Let me just pull out the charts. Yep. So we talked about this critical level or this equal highs that had massive liquidity building over here. And once price sweeps these highs straight into a level of resistance, a level of supply, which is a supply on a daily as well as on the weekly. We talked about once price sweeps these high and closes back within this range, then that would be really bearish for Bitcoin. And lo and behold, we saw an aggressive sell-off exactly just like we called. So there was around a 13% drop, and this was one of the scenarios that we covered last time around. So if you're new, subscribe to the channel and hit that like button so that you're aware and you don't miss out on all these scenarios and moves that we cover on our weekly reviews. Now, let's start off with the weekly now. Yeah, so we specifically talked about the importance or the significance of this range high, and if price forms a deviation at this level. So price is currently floating. It has broken down, closed above, and now again the entire week we saw that move down. But before the week ends, before the end of the week, actually, it's still 1.5 days left for the week to end. The bulls are starting to push price higher and close back above. So if we get like a couple of convincing closes above this level, I think that there's a very high probability that the price will push higher, at least towards the range breakdown. And obviously this is another level that we had covered on multiple occasions before price broke down from this level. So we were also prepared for this move down. Yeah, again reiterating the fact that if price can close above this important range or old range high, then the probability of tagging the 27 to the 30,000 region substantially increases, because there's a massive inefficiency between these two levels. So this is what I'll be watching on the weekly, and obviously to be bearish, I think that there has to be a convincing close below this level. We have also covered the scenario. Once price breaks below this important level, I think that again all this massive inefficient move that was formed in early or late 2020, that should get filled in, and then there's an untested level of demand that we have since September last year. Price should very likely be testing this level before possibly reversing or going down lower and testing this untested level as well, then reversing. So the 9,000 to the 12,000 region, in my opinion, remains very critical or very important for Bitcoin for its future price action. Because if this level gives way, then because if this level gives way, then I'm not sure if there's any level of strong demand, because this is also a very inefficient move. So I think that once this level breaks, then I guess 4,000 for Bitcoin is definitely on the charts. Yes, it sounds very pessimistic, but this is what the charts are telling me, and this is what I'm presenting in front of you. So be prepared, because there's no certainties in cryptos. There's just possibilities. So break below this range, 10,000 to 11,000 is on the cards. Break below this range, 4,000 level is definitely on the card, and that is the possibility that I'll be eyeing on Bitcoin on the macro. Let me clean this out and then we'll check out the daily. For the daily, rather, let me shift to another chart which has more levels marked on it already. So yeah, price has been testing this level of supply, this daily level of supply that we have marked for a long time, and we've been watching for a long time, the 22 to 23,000 range, and then this level of supply which comes in around 21 to 22,000. As we can see, price has tapped this once and twice already, and it was rejected aggressively. Now this sort of reminds me very much like the scenario that we've seen around this region. There was an important level of weekly supply or daily supply around this level. This was actually the weekly supply that we were watching previously, and I have covered this scenario in my videos as well. So price moved up, rejected aggressively, then again it tried to break this level, rejected aggressively, and then the rejection kind of got less and less aggressive, and that's when we saw this breakout. Now this obviously formed a deviation straight into the level of daily supply, and again this was covered in my previous videos before selling off aggressively. Obviously the macroeconomic factors had a massive hand to play in this rejection, in this sell-off, but the situation on the global macro hasn't changed yet. So why price shouldn't or price cannot form the same structure here is something that you should watch out for. Again, important level of daily supply. Price has already swept these highs. Now once price breaks above this level, the probability to tag this level obviously increases. However, this is where everyone will get bullish. Now this is what you should watch out for, because if everybody is bullish and everybody is buying, basically that's the region where the market makers would target as a massive liquidity zone, and they will sell into those orders. So just like we saw over here, let me just scroll up. So yeah, just like we saw price breaking mid-range, everybody got bullish straight into a level of supply. It formed a deviation, closed back below, and aggressively sold off. So something similar could very well present over here. When price breaks above this range, everybody gets bullish, eyeing a move towards the 28,000 region. Price forms a deviation, closes back within this range, and that is when we will see that aggressive sell-off straight to the range lows. Now, in my opinion, if we form this deviation, then I don't think that this level of demand will hold, because the market makers will get that exit liquidity around this region where there'll be massive buy orders coming in from all ends, and that's where they'll start selling it. So if price forms a deviation at this level, there's a very high probability that we break this level of support and move towards the 15,000 region and possibly towards the 11,000 region of demand that we have over here. Let me check out exactly what the level over here is. So it comes in at around the 15,600 region of demand. The 15,600 region. Yeah, let me just open up the charts to be more precise about it. Yep, the first level of support should be once this just give me a moment, let me fix this shit up. Yeah, so once price breaks below this level, I think 15,000 level of support should be next, and if then this gets broken on the daily, then obviously the 9,000 to the 11,000 region is next, and we have covered as to why that is important. So this is what I'm looking for on the daily as well, and let's delve into the H4 quickly. Now, as we talked about last time around, this was an important high where there was massive liquidity. We had covered this scenario in our previous episode. Price swept this level straight into a level of supply and sold off aggressively. So price has been gyrating within this massive range for around a month now. This mid-range is important from a bullish standpoint, because as you can see, this level has been a level of resistance, and once it broke above, found support and rallied straight to range high. Again, it acted as resistance. Now it has broken above, right? So I am expecting this to hold for now at least, and for price to at least tap this range high. Now, another thing that is to be noted is that price has now formed a higher low relative to this low over here. So we had a high which was broken. We formed a higher high. Now we have formed a higher low relative to this low over here. So all price now needs to do is hold above this level to be bullish, because if price holds above this level of supply around 22,000 is already a bit exhausted. So I would be expecting this to consolidate around here and then break out. If something like this happens, then obviously I would be eyeing a move towards the 28,000 region that we've covered on the daily. It has to form this sort of a consolidation under here, because that is a very good indicator that the price wants to move higher. If it moves higher, breaks above, and as we just covered, forms a deviation, then there is a very high probability that even this demand gives way and price moves lower to around the 15,000 region. So this is what I am looking for on the H4. Again, if this forms to be a deviation, then that's the moment where I'll be probably staying out of the markets, because I'm not really sure if this is going to just retest this, then move higher, or if it's going to break below this level and continue going lower. But yeah, once this level gets broken, then that's a very good indicator that we will be looking for 15,000, or the price will be moving towards the 15,000 level next. Now obviously, because we have this equal lows around here, so even if price does manage to form a deviation, I think that if it has to move up, it has to take these lows out first. So if this comes out to be a deviation, price starts moving below this level, then I think that taking out these lows and then closing back above is a very good indicator that price would probably tag the mid-range and then range high. And because obviously this is an exhausted level, any consolidation at this level should result in a breakout and subsequent move higher towards the level that we've already covered. So this is what I'm looking for on Bitcoin for now. Let's quickly look at Ethereum. So on ETH, we'd already covered last time around that it has broken below its all-time high support, unlike Bitcoin, which is still flirting at this level. And that's because whenever Ethereum moves, it moves at a higher percentage than Bitcoin. So if Bitcoin would move 10%, Ethereum will probably move at 15 to 20%. And that's why we're seeing Ethereum break below this level. So again, for Ethereum, it would be a very good indicator that this level of resistance, so for the markets in general, it will be a very good indicator what Ethereum does when it moves into this level of resistance. Because if it moves at this level and could not close above, then I think that obviously the entire market would be going down. And if it can convincingly close above and accept at this level, then again I will be eyeing higher prices on Ethereum and looking for longs in alts. And a confluence for Ethereum to break this level and move higher would be the Ethereum merge, which is now confirmed to be around mid-September, I guess, September or October. So again, that is a very good indicator, or a very good fundamental catalyst for Ethereum to move higher. But again, this is a key level that Ethereum needs to reclaim before I would be very comfortable in my longs. But again, if it does not close above, comes back to this level, gets rejected, or forms a deviation and then gets rejected, then I guess the mid-range and this level of demand that we've already covered in previous episodes, which is around $400 on Ethereum, is very much on the cards. Very simple action plan for Ethereum. Right now it's doing nothing. There's no real level of support apart from this, which price has already wigged into, and it's currently consolidating over here. So again, both the scenarios covered. Move above here, close back above, I will be eyeing higher prices. Deviation or gets rejected over here, move below, then break below this key level of $800 level, and then I will be eyeing the mid-range or this level of demand that we haven't tested on Ethereum. So I will keep it short this time around, and I've covered almost all the scenarios that I'm looking for. Now, goes without saying that this is a very turbulent time because of what the Fed is trying to do. They're trying to tighten the economy and destroy demand, and they wouldn't care if they, if the stock markets or the risk assets move down lower. They have the primary objective is to curb inflation, and in an attempt to do so, they would not care if a lot of people lose their jobs or money. So be a little vigilant, be careful, manage your risk, and do not go all in, because this is not a time to be risk on. This is a time to be protective and risk off. So that would be all for today. Hope you guys found this insightful. Hope you guys liked it. And if you did, hit that subscribe button and like the video to show your support. And I will talk to you guys soon. Cheers, everyone.